Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. Learn about fix and flip loans, BRRRR financing, rental, fix to rent, commercial, multifamily bridge loans, business loans, and so much more. And now, your host, Beau Eckstein.
What's up, everyone? This is Beau Eckstein with the Investor Financing Podcast. And on today's episode 2, I'm going to talk about single property rental loans and some advantages of financing your properties with these portfolio loans. We just rolled out this product. It's eligible properties, single family homes up to 8-unit properties. So it could be an 8-plex, a 7-plex, a 5-plex. This is huge because in the past, there hasn't been much long-term portfolio loans available for multifamily properties, or small multifamily properties, I should say. Well, we have a solution now. We can go as high as 80% on purchase and rate and term refinance. Eligible property types, single family, multifamily up to 8 units, townhomes, and condos. Condos have to be warrantable. We can also do mixed-use properties as long as 50% or greater is residential. 80% LTV, like I said, on cash out refinance, you're looking at 75% based on credit score. We go as high as 75%, I should say. And we use new appraised value after 90 days, although we do have a 5% haircut after 90 days from 4 to 6 months. After 6 months, we just use straight new appraised value. So this is good for you guys that are buy, fix, and hold people. You're going in with private money. You're fixing up the property. You're stabilizing. You're putting a tenant in. And then a few months later, you're refinancing and pulling your cash out and moving on to the next property. This is a huge, huge opportunity, guys. We don't require tax returns. We do need 6 months of PITIA reserves. And that's principal, interest, tax, insurance, and HOA payment, and that's how we figure out your debt service coverage ratio, right? So it's got to be a 1.2 or higher on the debt service coverage ratio, and we'll finance vacant properties as well. There's some nuances to that, but I just wanted to kind of go over like the general overview of this product because it's very exciting to be able to do this on small multifamily as well as single family homes. And what's also really cool is I've gotten so many calls for these borrowers looking for funding their smaller deals. So as long as the value of the property is at least $62,500 or greater, and the loan amount's at least $50,000, we can fund your deal. So I've got a lot of investor buddies that are buying in the Midwest, and they didn't have a long-term financing solution, so now you do. On future episodes, we're going to go into our portfolio programs where we can lend on, 20, 30, 100 homes with one loan, okay? And we have some phenomenal rates on that. And also our rental loans for our small balance multifamily. In the past, there were just like 2-3 year bridge loans available. And well, now we got a 30-year fixed product, okay? So this is really, really going to open up the doors to a lot of investors that didn't have the financing, that were having trouble with local banks trying to get long-term financing. I'm really excited to kind of dive deep into these programs. Today, I just want to give you kind of an overview of the general requirements on these programs. So what we're looking at for pricing, loan to value, whether it's a purchase or cash out refinance, and credit score of the signers of the entity that's the borrower. So we only make loans to entities like a LLC or corporation. And then you, whoever are partners in that business, if you have a 20% ownership or greater, you would also have to sign as a guarantor of the loan. There's an interest-only option too. The amortization, you can get a straight 30-year fixed, a 10-year fixed, 7-year fixed, or 5-year fixed. And the pricing also is dependent on which option. The best pricing is typically the shorter fixed period, right? As opposed to 5-year fix is a little bit better than the 30-year fixed. And that's kind of what I wanted to cover today in today's call. I wanted to keep it short. In the next upcoming episodes, we have some really good guests coming on. And then once in a while, I'll just do a segment like this where I just go over some products that I know that you, the listeners, are interested in and would get great value out of it. So please share this with other investors out there that would get value out of this podcast. And I'll keep bringing in content, and my broadcasting skills will get better as I go. I usually just shoot off the hip. I don't like scripts or anything like that. So just me talking. So have a great day. Happy investing. And I'll look for you on the next episode. Thanks a lot.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.